Good morning, everyone. It's actually good to be on the stage. I have spent, like all of you, the past 18 months behind the screen with my kids running behind me. So it's good to be back. And thank you so much for the introduction, because it actually helps me skip this slide. I prefer to go straight into the topic at hand today. So what has been interesting when you look at Southeast Asia and the Southeast Asian tech ecosystem is, if you look at the last couple of months, the news has been dominated by large venture capital rounds. And these large venture capital rounds have been on tech companies in Indonesia, tech companies here in Singapore. What I want to do in the next 15-ish minutes is kind of talk about the history of the exit landscape. Because whenever we make investments in the tech ecosystem, the question is, what do our returns look like? In my job as a VC, I spend a lot of time fundraising for our funds. And in that time, I noticed that a lot of the limited partners, and whether it's pension funds or family offices or fund of funds, were asking, yeah, Mike, we can understand that you are enthusiastic about this ecosystem. But where are these returns coming from? We haven't seen a large number of IPOs in the region. We haven't seen a large number of billion-dollar acquisitions in the region. So you can be bullish on the companies you invest in, but where do these returns come from? And because I received this question so many times, I decided with our team, why don't we put together a research paper together with INSEAD that tells us what does this ecosystem of exits actually looks like, both historically and in the future. So a quick look back to 2018 and 2019. We launched the first report in 2019. One of the most interesting factors was that the number of deals actually peaked in 2019. So a lot of companies were able to raise their first, second, third, or maybe even their fourth venture round. But what was interesting is that a lot of these funding rounds were at the very, very early stage. We didn't see a large number of typical Series B or Series C rounds. I'll talk a bit about the start of this year, of 2021, because there's an interesting statistic if you would compare the data to 2019. So although there were a lot of deals and there was a lot of funding, we did see that most of these funding rounds were at the very early stage still. Another interesting stat is that although 2020 was a very impactful year for everyone and also for the startup tech ecosystem, it showed that technology was very, very robust. If you look at the US, where a number of large IPOs happened, if you look at the large number of funding rounds in 2020, I would say that 2020 wasn't a bad year for technology itself. But here's an interesting statistic. When 2021 started, in the first quarter alone, over $6 billion was invested in Southeast Asia. That was the best start a tech ecosystem in this region ever had. So we're seeing a big interest and a majority of late-stage investors looking at investing in companies here. And those investors are not just from Southeast Asia. We're seeing more and more top-tier VC funds putting together rounds and investing in companies here in the region. The other thing is that we're seeing the number of deals actually increase across all stages now. So not just the early stage where you'll find angel investors and seed investors or early stage funds like ourselves investing, but we're seeing large PE funds. We're seeing larger family offices, large institutions from across the globe making investments here. And I think what is interesting is that most of these investors at the later stage, and whether it's a Tiger Global or Peter Thiel's Valar, they tend to move very fast. Once they've built a conviction around this ecosystem, or specifically a company, they tend to move at a very rapid speed. So another data point that we saw was, back in 2018, 2019, it would take a company on average 18 to sometimes 20 months to raise a Series B or a Series C round, a larger investment round. What is happening now is that it will take companies around 6 months. So the times to raise those funds actually decrease really, really fast. So what did we see in 2020? Of course, when investors can't travel, overall deal flow and overall investments do decline. And we've seen it globally, and we've seen M&A decline as well. But this was only in the first part of the year, because towards the third quarter and fourth quarter, deals picked up again. And this was mainly, and you'll notice yourself as well, when we adjusted to the fact that, okay, we can't travel as frequently as we used to do, or we can't do as many deals as we used to do when we would go to Vietnam or Indonesia or Malaysia. We decided, well, we'll do the same over Zoom. We'll do the same over online conferencing. So deal flow picked up again. I think the other thing is that the urge for larger companies to look at acquisitions also picked up. And whether it's listed tech companies looking to buy out smaller companies because they want to enter a new region or expand their product suite. And this is a trend that we're seeing continuing through 2021. Of course, I think one stat that we all are not surprised by is that the biggest deal flow is coming from Indonesia still. But one of the things that we found interesting is that, of course, Singapore as a hub, the third country now is Vietnam, which means that a lot of investors in the region have been investing in Vietnam for a long time, over the last 7 to 8 years, but deal flow has increasingly picked up in 2020, and it's continued to pick up in 2021 as well. For Vietnam, I would say the interesting part is that it's more on the early stage side. It's more we're seeing deals at the seed and Series A stage. But it's an important stat, because if you look at Indonesia, if you look at Singapore, 7, 8 years back, there was like a lot of deal flow on the seed and Series A stage as well. And we always talk about these funding gaps because there's not too many funds available for companies at Series A or Series B. Now we're seeing funds available across all of these different stages. So we foresee that not only deal flow will pick up in Vietnam, but the number of late-stage investments will also pick up as the pipeline of early-stage companies is getting bigger and bigger. One of the discussions that we are always having, specifically here in Singapore, is if you look at the local stock exchanges, and whether it's Indonesia, whether it's Singapore, we don't see that the liquidity is that as deep as we see in other markets, such as China or the US. So a lot of companies are still looking at the typical IPO routes where they want to list on the NASDAQ or the New York Stock Exchange. But here's when it became interesting, specifically in 2020. Because the rise of SPACs was phenomenally high, and we've seen all the headlines where the number of SPACs outpaced the number of traditional IPOs. The ability for sponsors to raise capital for their SPAC was increasingly fast. We're now seeing the flip side of that trend as well. We're seeing SPAC sponsors hunting for targets because they have this 2-year window to find a company to merge with, and then eventually list on the exchange. But over the past few months, there's one thing I have kept on saying. Because of the rise of all these SPAC vehicles and sponsors looking for targets globally, not only here in Asia, but also in Europe, also in Israel, also in India, the attention for public investors on the region has increased more and more and more. So if you look at all the recent announcements, and whether it's Property Guru, And I just learned that Credivo is also looking at a SPAC listing potentially. That public investors are now taking Southeast Asia as an ecosystem and as a region seriously. So I'm not going to say that we're going to have 50 SPAC listings coming from Southeast Asia. But there is a trend where public investors, private equity firms, hedge fund managers, are actually seeing technology as an asset class in Southeast Asia. This will do a few things. One thing is, we'll see more and more late-stage funding rounds happen, and we'll see those rounds happen faster and faster. Where in, although I always wanted to say, in my old days, a Series B round was 20-odd million, 30-odd million. We're now seeing Series B rounds well worth in the hundreds of millions. That trend is going to continue. So then the question becomes, where do all of these companies, as they are raising more rounds, where do they exit? So we still foresee that predominantly the number of exits of a significant size will happen in the US. As it has more liquidity, it's a deeper market. But I think where the Singapore Stock Exchange is now, I think, very close to allowing SPACs to be listed, we're seeing Indonesia with traditional IPOs such as Bukalapak, that the region will wake up to IPOs as well. So the biggest question is going to be, are we going to see more institutional investors, public market investors in this region being interested in investing in technology? We think so. But the uptick won't make us at an equal standing level with the New York Stock Exchange or the NASDAQ. So for larger acquisitions, for larger SPACs, for larger traditional listings, we still foresee that the US is going to be the main market. Good news is for the Southeast Asian tech startups is that there's more and more appetite for companies coming from this region. We'll have to see where kind of the SPAC phenomenon is going over the next few months. I think we do need 1 or 2 successful listings here in the region to make it sustainable over a longer time. I think whenever the first or the second SPAC listing coming from this region is not successful, it will hurt the image overall. So it's going to be very, very important, although there's more interest, that we see 1 or 2 successful listings over the next 12 months. So these are a number of companies that have been looking for listings in the region. I'm thinking that the number of sponsors that are looking for targets here is going to increase again, given that so many SPACs have been able to raise capital and are looking for targets in the market as we speak. I want to close off with a future outlook. As a firm, we've been investing here for the past 10 years. And I would always say that the first half of 2021 is something that I've never seen before. The level of interest from institutional investors, the ability for companies to raise capital, the ability for companies to expand to new markets, attract a lot of talent as well, is something I've never seen at this pace and at this rate before. So overall, for the next 3 to 5 years, we're very bullish that not only the large companies such as a Grab or a Gojek are able to command large funding rounds, we're seeing a huge pipeline of companies, whether it's in the fintech space, whether it's in healthcare, in education, in agri-tech. We see a huge pipeline of companies being able to raise significant enough rounds to get them to unicorn status, and eventually become acquirers themselves. What's going to be crucial and critical is that we not only raise a lot of money, but we have some sustainable, strong brand names that are going to exit. And whether it's through M&A, which will still be predominantly happening in the region, or whether it's through an IPO, we're very bullish that the ecosystem that has been built over the past 10, 15 years is now coming to fruition. Lastly, what has been interesting as a trend as well is that we're seeing not only the IPOs and the M&As, but even secondary funds are coming to the region to say, hey, now that this ecosystem is maturing really fast, we should look at secondaries of either funds or secondaries of employees or early stage investors as well. And to me, that is a huge sign that we are at the stage or at the cusp of maturing at a very fast pace. And lastly, my very last slide is we try to make a projection of the number of exits that we see on a year's time. And you've seen that it's going to be increasing. We had a little dip in 2020, but we see it increasing over time over the next 5 years. Thank you very much for your attention.
Can we have a hand for Mr. Michael Lints?